And then at this point, I'm going to turn it over to Jonathan. So Jonathan Weaver is a housing counselor with Mon Valley Initiative. They're one of our partners here in the Mon Valley, and he is a housing guru and will teach you lots of things this evening. So Jonathan, feel free to get started.
Appreciate you saying that, Katie. I don't know if housing guru is the right description, but we try. I am a housing counselor. I work for the Mon Valley Initiative. We have two offices. We have an office in Homestead, right on the boulevard, and we have another office in Charleroi, Pennsylvania, which is in Washington County, a river town. And then Mon Valley Initiative, we try to cover that territory between Charleroi and Homestead. So I am the housing counselor and pretty much the housing department. So if you call for an appointment, you're going to reach me, and we'll get that set up. So I was when I woke up this morning, Katie, I remembered it was today, so I was happy and excited. So I love talking about housing, people buying homes. There's challenges that come with that, but there's also great reward that comes with that. So I don't believe everyone should be a homeowner. I know that sounds probably silly to come out of my mouth, but some people are better off to be renters for various different reasons. But if you want to be a homeowner, I applaud you for standing up. It's a scary undertaking. And as I said, we're kind of fraught with some challenges here in the past year or two since COVID happened. So let me get started, and we have some get my screen up, and we'll start beginning. So yeah, I'm with the Mon Valley Initiative and super excited to talk about a topic that I'm passionate about. And the first thing I have on my presentation is, a quote that says, "Remember, you can't lift 1,000 pounds all at once. You can easily lift 1 pound 1,000 times." So I love that, and I love how that relates to being a homeowner. You can't save $1,000 in one paycheck. It's just not possible. But you can save a dollar 1,000 times and get to the same point. You can't fix your credit in one day, but what you can do is take one step towards fixing your credit, and we'll get to the end. So keep that one in mind. My background before I came to Mon Valley Initiative, it'll be 10 years this summer. I can't believe it's been that long. But my background was in mortgage lending. I've worked for different banks in and around Pittsburgh, helping people with mortgage loans. So one of the things I brought with that is, to try to turn that focus and try to teach people that I met with and meet with to if we think like bankers, if we know what they're looking for, it can help us get in position to show them exactly what they're looking for. And I think it's simple. I think it's easy. It comes down to four areas. There's four basic areas that lenders look at when they're helping you with the home loan. So we're going to touch on those and hopefully give you a base of knowledge to build on and as you may look at home ownership for yourself. Why does it matter? Well, it matters because it helps you to get through easily, and that's the big part. And one of the things that we found over the past few years is that as mortgage lenders are busy helping people with purchase loans and refinancing, they are less likely to focus on people that need more help. People that have credit issues and have cash issues. So, why it's important is because we want to make it that when they touch your file, it's easy to process, it's easy for them to work through, which increases your chance of being able to be approved. So that's why it's important to me. The first thing we think about what a lender thinks about when they're trying to help someone buy a home is the collateral, the very house you're going to buy. So you've signed a sales agreement, you've done your home inspection, and the next thing you do is that you okay your lender to do an appraisal on your property. And all they want to find out is it worth what you're paying for? So if you sign an $80,000 sales agreement, they're hoping to see that the valuation is 80,000 or greater. That costs you usually about $500. It might be a little bit more expensive than that at the present time, but I think $500 puts you in the ballpark. So collateral is the first thing. And the second thing I'd tell you makes it simple is, don't worry about it. There's nothing you can really do. There's nothing the buyer really can do to have any control. There's no effort that you can do to make that change in that valuation. Your bank orders it, your bank gets the appraisal back, and you have absolutely no control on how that comes back. So, four things we have to worry about. One, you can't do anything about anyhow. So now there are ramifications when they come back. Sometimes the sales appraisal comes in a little bit lower. There's some next steps that we'd have to talk about that, give you some options on what you can do from that point going forward. But first thing of the four is collateral, and we've already agreed that there's not much you can do about that. Second one, and obviously the biggest obstacle that I see when I meet with people is credit. Having credit that passes the lending test. And a simple formula that I try to convey to people is to have at least four accounts of any nature: car loans, credit cards, student loans, anything that would show on a credit report. I think would be important. Four accounts is probably that sweet spot, that are open, so they're not closed. You haven't closed them for some reason, and they're more than a year old. So there is a as credit gets older, it certainly helps your credit score. And with that, if we do know that if you have four accounts that are open and more than a year old and you pay on time, you're going to have a credit score higher than 620. And that's where we see mortgage credit open up for people, is at that 620 credit score. As you may know, you have three credit reports. There's Experian, TransUnion, and Equifax. And in the mortgage world, what they do is they throw away your best score, they throw away your highest score, they throw away your lowest score, and they use your middle score. And that can change. So one month, TransUnion may be your middle score, and the next month, Experian might be. So I don't try to figure that out. I just try to get people to focus on those simple things, those 1,000 things, which is to have credit that's open, with some time behind you, and that you pay on time. So that's credit. So building, we talk about building credit. And again, I'm not a very smart man. I try to make it as simple as possible. And in my simple process, I say clear out the old. So if you have collections or things that you've paid slow, we need to clear those out. Sometimes clearing that out just means time. Sometimes clearing that out means paying or settling. And the second part of that is to have something new. So have something reporting that's positive. And by doing that process, I think you build credit and can do that on your own. Um, so, if you have three collections and one open loan, I guess the simple way that I look at it is that there's three negatives and one positive. So, at that scenario, it's a little bit harder for your credit score to start going up. So, there, if we reduce the negatives, if we clear out the collections and increase the positives by maybe opening a few accounts, we would see a positive, rapid growth as far as credit score. Some huge things if you already have credit: paying on time obviously is the biggest. Keeping your balance low is the second biggest. One of the things that we find is that if you go over your available balance, so if your available balance is 1,000 and you charge over $1,000, you're going to see some rapid declines in your credit score. So as you're positioning for home ownership, you want to keep yourself in a position where you're not getting close to the credit limit. We're going to try to keep it on that other end of the spectrum, which is to have it paid down or in a perfect scenario off. So we talk about that when I get to meet with people. Why else is credit important? Because here's a statement from Consumer Reports that says that your credit history has a greater impact on your car insurance than your driving history. So people with poor credit pay on average $1,500 higher than people with good credit. It just shows ability to manage your financial affairs, and that's a predictor for insurance. The actuaries use that. So as people get better with credit, so as we're learning and building credit, I often encourage them, go and check your car insurance. See if you can save a couple bucks by getting a maybe new insurance company. But now that your credit score is higher, it may help you. The other thing with insurance is look into paying every 6 months. I know for my family, we save about $400 to $500 a year by paying every 6 months, as opposed to a month and month. It's just cheaper for them to manage that on a two payment kind of basis. So look into that. Sometimes with tax refunds, that's a good chance to kind of springboard into that and save yourself some money. The third thing that a lender is going to look at when someone's asking them about a home loan is capacity. So capacity, quite simply, is measuring what do you earn. So what is your income? So that's a whole section there, stability of income. Most lenders are looking for a 2-year history. There are exceptions to that. If you graduate college and you have an accounting degree and you've got a couple months in the accounting field, that would be an exception. But if you're hourly or commission, if you're in sales, if you own your own business, then likely they're going to put that 2-year litmus test to it. There's been some softening in that with COVID, with people experiencing periods of unemployment because of COVID. We've worked, some of the rules have been changed to kind of soften that line to be able to allow people to explain those breaks maybe they experienced during the COVID pandemic. So the second part of capacity is what's your debt? Quite simply, that's checking your credit report, and what comes through the credit report becomes your debt. And we look at that ratio, how much of your income is going towards your home payment and how much of your income is going towards your monthly debt. So these ratios, 29-41, are commonly what we see with an FHA loan. So that means that 29% of your income can go towards your mortgage payment. So if you make $1,000 a month, $290. If you make $2,000 a month, it's $580. So keep going through that and look at that as far as your income. And then the 41%, we know people have debt. So the new home payment plus the loans that you have outstanding should not exceed 41%. And I keep saying should not. There are exceptions. There are times where someone might have a 32% front ratio. And if they demonstrate good credit, if they see a decrease in their rent to mortgage payment, if they have low debt load, there are instances where that could be something that could be approved. So these are guidelines. Guidelines don't hold you to anything. They simply give us some framework in which order to begin with to what might be possible. So capacity 29-41 ratios. So, when I meet with people, I ask them to send me pay stubs. We look at the credit report and we begin hammering out what that might mean for them based on where they are at the present time. Yeah, so this was a clip I picked up that talks about, financial institutions are likely to deny Black applicants because of inadequate or poor credit. So what does that mean? Well, that means to me, my clients that I meet that happen to be Black, we focus on credit because we know that that's probably the most likely reason that they would not be issued a home loan. If you're low income or moderate income, then the likely reason for that is debt to income, that you have too much debt compared to your income. So if you are low and moderate income, then we're going to focus on making sure that our debt to income are in line, or at least we understand that when we approach a bank to ask them to help us with a home loan. So two very important things I think we just need to know so that we can put ourselves in the best position to be approved and to be approved on the first go round. So important things to know. Fourth thing a lender is looking for is cash. How are we going to pay for these costs in order to make you a homeowner? Pennsylvania is one of the highest states in the country as far as costs to get into a home. I share with my clients roughly, as we're just talking about rough numbers, just trying to narrow that beam of light to kind of get them focused on, what it's going to cost. We start with the big numbers, 10% of the purchase price. So if your home's 100,000, the question on the table to me is $10,000. If it's 200,000, then the question we have to answer is, where is 20,000 coming from? And the great news is it doesn't all have to be from you, but we have to at least know where that's coming from so that we can bring these pieces together and get into a sales agreement that makes sense and one that will work on your situation. So that 10%, it goes into a couple directions. It's for down payment. Um, it goes for closing costs. So to me, those are the legal expenses, the appraisal, the recording, the price that it costs to get the deed done, title insurance, all those miscellaneous fees that I kind of see as the legal bucket. And then escrow is just kind of a fancy word for savings account. And when you have a home loan, usually your taxes, your real estate taxes, your homeowner's insurance is paid through your payment. I know with my own mortgage payment, I send $1,000 and that covers the amount that I owe for the loan. Plus it sets money aside for my taxes and insurance to be paid for by my bank every year. I don't have to pay it. It's in my home loan. So that's what escrow is. So how can you pay for these costs? Savings, maybe you have savings. Seller assist. We can ask the seller to help you with a portion of that 10%. Grant. So sometimes there's programs out there that assist people with money to purchase homes. Gift. Maybe you have an Aunt Sally, and Aunt Sally's always wanted to see you be a homeowner. She can provide you money. There's a process that's done to document that, but Aunt Sally can give you money in order to help you buy a home. You can get a loan against an asset. Maybe you own a boat that's free and clear. You could get a loan secured by the boat, has to be secured against an asset, and now that cash generated from that loan can become part of your purchase of a home. Again, there's a process that the bank wants to know and follow to do that. And of course, the loan payment has to be calculated into your capacity, into your debt to income ratio. Or you could sell an asset. So you can sell gold, stock, baseball cards, jet ski. And again, there's a documentation process for all of those in order to make that money work in your purchase transaction. So we have to show, prove, document these funds, whichever man. Tax refunds. That's why spring is such a great time for people to be buying homes. That's why we see so many people. The housing market. One of the reasons why the housing market goes up in the springtime, because federal tax refunds in some cases can be enough to springboard people into home ownership. So roughly 10%. Can come from various sources. If Aunt Sally wants to give you all 10%, there's programs that allow that, and we'll touch on that here as we go. But cash is a big part. Cash is usually that second biggest obstacle for people behind credit on what's holding them back. One of the things that we've experienced in the real estate market over the past couple of years, 18 months, it's kind of slowed down a little bit, was that sellers were not willing 18 months ago to help buyers with closing costs. There were so many offers coming in for home for sale that they were not accepting offers that were needed help. Um, uh, so that became a challenge for many of the people that I deal with who are just trying to get on that first rung of the ladder, where they don't have an Aunt Sally. They have small savings. They really needed that seller assist to help springboard them into home ownership, and it just wasn't available. Interest rates, you may be following the financial markets. I hope that you are. If you're thinking about home ownership, it's a total knowledge kind of thing. Interest rates, the lending rates have gone up. And by going up, that's slowing down inflation. That's exactly what it was supposed to do. And it also we're beginning to see less and less people trying to buy homes. So what that does is that makes it easier for those people trying to get on the first rung to ask the seller for seller assist. So it's starting to come back again in being able for a buyer to ask for assistance. So, and I think it's pretty simple. In my mind, a seller wants to sell. They want to sell their home. They put their house on the market. If a good realtor brings them someone who has a pre-approval, they've got good credit, they can afford the monthly payment, and they have portion of the cash, but they need a little assistance. If I'm a seller and I want to sell my home, I may be, and I might very well be willing to help that person with some seller assist in order for them to buy my home. So that's why I think it works, and certainly something that's starting to come back a little bit in the real estate market locally. There are a couple of big programs that I think of that offer assistance. So assistance to me is cash help you get into your home. The first front door, the one on the right, it's a matching program. It comes out in the springtime. It opened up on March 15th. For every dollar you put in, they'll give you $3, I beg your pardon, one for three, and with a max of $5,000. So the most that they'll give any one person is $5,000. So if you put in $1,600, they'll give you $5,000. So that leverages your funds to help you get into home ownership. So that's such a fantastic program. One of the caveats, one of the catches with that is it does require a little bit better credit score, 660 to 680. So 620 gets us in the game. We're always going to work to try to provide the best credit score possible. And here's one of the reasons why is that it can help you with reducing your cash requirement and get some money from somewhere else. The second program is PHFA K-FIT. K stands for Keystone. We're the Keystone State, and FIT stands for free in 10. So in 10 years, you are free from any obligation. And what K-FIT will do is they'll provide 5% of the purchase price with no repayment over a 10-year term. And it does require a 660 credit score. And this program's available 12 months out of the year. So it's always available. Whereas First Front Door, once those funds are all utilized, the program will close and we would see it reopen again, typically next spring. PHFA K-FIT is a 12-month-a-year program, so it doesn't shut down. In my mind, the K-FIT's a better program if your purchase price is over $100,000. They're going to give you more money under PHFA K-FIT than you would be able to utilize under First Front Door, but various reasons why one might be favored over the other. So and there's several other programs out there. At one time, I know there was some Penn Hills money. Pittsburgh City, Pittsburgh has some money. Different things that you want to ask people about, leverage about, and learn about. The other part is not just asking, but taking that next step. So my hope would be if you are in the market to be a homeowner, you're just learning, go Google First Front Door. Go read about it. Go Google PHFA K-FIT. Go into the different resources that are available and learn about those programs so that you can have a greater understanding of how that works. If anyone's out there as a veteran, VA loans are some of the best loans I think out there. They do 100% financing, so there's no down payment, and the seller can pay all the closing costs. That makes it a veteran can technically get in with no money if the seller's willing to pay. The rules for VA are a little bit relaxed, and usually they will side with the veteran, which I think is the exact way that those loans should go. So if you're a veteran, or if you know a veteran that might be in the housing market, make sure that they learn about this program and see if it can help them. USDA loans, not so much in Homestead, but sometimes in Charleroi, we get people interested in the USDA loan. So it's the rural housing. And I think it's for more rural areas. And when I think in our area, like Elizabeth, PA and out, Elizabeth, PA to Ross Draver to Uniontown, that's kind of where I see USDA begin to open up. Another great program that does 100% financing, and they will finance closing costs. So that makes your cash investment a little bit lower. 640 is the minimum credit score for that one. They will go lower with a manual underwrite, but that is a good program if you're thinking of something more in a rural area rather than an urban area. Conventional loans, just another type of loan that's available. Usually it's a little bit better credit requirement, 640 rather than 620. It has PMI, which is private mortgage insurance, and you pay that monthly. It's a monthly fee based on how much you borrow. And the PMI on a conventional loan can go away. So as time goes on, there's different things that can happen for that to go away. So then your payment would go down by whatever that amount was. There are 3% down option loans with conventional, which is fantastic. But the seller assist is limited to 3% when you're putting less than 10% down on a conventional loan. And lastly is the FHA, and this is the one that historically we see for first-time home buyers. Doesn't mean you have to have an FHA loan, but there's some things built into it, I think, that make it easier and open up some opportunities. First, the credit score. 620 credit scores where we see it open up. It offers some subtle benefits. You can get 100% gift. So I mentioned Aunt Sally, 100% gift on an FHA works. 100% gift on a conventional won't work. So there's some subtle kitty condos. So if you have a kid in college and you want to buy them condominium, it'll work with FHA. They can do co-signers, and the seller can pay up to 6%. So we talk about needing 10% cash. Well, if a seller picks up 6% of that, then that helps you get to be a homeowner much faster. So certainly one of the reasons we see for first-time homebuyers, people just trying to get started, why it's such an attractive program. On an FHA loan, it's called mortgage insurance premium, and it is part of your monthly payment. Unfortunately, with an FHA, it never goes away. It's part of your home loan till you're done paying it or refinance it. They do write that FHA loans you can get an FHA loan with the credit score as low as 580 and with extenuating circumstances. So the only extenuating circumstance I've seen ever work is money, that you have money in savings, maybe have investments. The extenuating circumstance to me has always been that you have cash reserves, let's call them large cash reserves after you buy the home. And that is one of the few reasons why I've seen an FHA at 580 get to go through. So great tool, a great program for people that need maybe a little seller assist, have a little bit lower credit requirement, or some of the other benefits that go with it. So just another tool out there to help you purchase a home. One of the things I always want my clients to think about is once you buy this home, oftentimes we take all your money into the purchase of the home. And I don't think that is the best formula, because I know there's back end costs. You got to move, you need a van, you got to pay, you feed people, you got to pizza and Coke and all that stuff that you need when people move. Utilities, you got to get utilities on. Plus you're going to want to update, you're going to want to decorate. So I know that costs money. And then lastly, I'm a big believer that having savings after you purchase your home is such a great idea. Things will break. I promise you. You had a home inspection. Home inspector said everything's fine. I promise you, in the first year, you're going to face some sort of unexpected cost that nobody told you about. So you have to be, in some part, prepared for that. So, even though it takes 10% to get into a home, I'd like you to have some additional savings. It makes you stronger. It makes you fiscally prepared to go into home ownership. So, keep those things in mind. Katie sent me a list. Some people had some great questions, so I put them all there. I wanted everyone to see how many great questions were given ahead of time. So, how much money will I need, or money needed for down payment? Five people asked that, so that's an important question. How much money will I need? And I think we touched on that normally that's going to be roughly 10% of the purchase price, but not all of it has to come from you. So we have to be able to answer that with your realtor, with you, who's going to pay, who's going to help us pay that in order to get you into a home. So about 10% is the big number. We can work it down to almost zero, really. Normally some lenders are going to want you to put some money into the deal, but we can get it down pretty far. And remember, when you sign an agreement of sale, when you sign a purchase contract to buy a home, it is a contract. It's a legally binding agreement. Usually your realtor is going to want money, and it's $500 to $1,000. We touched on getting a home inspection. I think everyone should get a home inspection when they buy a home. It's not required. Nobody's going to make you, but I think it's a step that should not be missed. That's $500, $600, $750. And then lastly, we talked about that the lender is going to collect some money to the appraisal. That's roughly $500. So you need anywhere from, 1,500 to 2,200 just to get this thing started. So you've got to have that money up front. No realtor is going to sign an agreement. No one realtor is going to put in a contract if you don't present a check of hand money. No home inspector is going to come out and do a home inspection for free. No lender is going to do. Some lenders do pay for the appraisal, and then you pay it on the back end. But you're going to have those initial outlays of cash to help you buy your home. Now, the great thing is that money is also towards your 10%, you're roughly 10%. So you are paying a part of that 10% through those different things that you're paying. How good does your credit have to be? So some people are asking, what if my credit's low? It needs work, strategies to clean up credit. So good. I think we touched on that too. 5 people asked that. How good does your credit have to be? Well, we know it's as low as 580 if there's extenuating circumstances. And remember, those extenuating circumstances are having assets, having savings. If you don't have savings, then that's probably not going to work for you. 620 is the next level, right? 620 is the next level that we talked about credit. Your middle score has got to be higher than 620. So that means you need 2 scores over 620. Going to throw away the best, have that middle. So 620 is kind of where we start. But remember, at 620, the grant programs aren't going to kick in for you. So that's going to increase your cash requirements. So it's worth it to do that work from 620 to get to 660, 680 higher. So what if my credit's low? We talked about my simple little way to fix credit. I think credit fixing is, money. You got to have some money to clean up some things, and time. So if you have less time, you need more money. If you don't have a lot of money, it's going to take more time. I know people go to credit repair agencies. I'm not a credit repair guy, housing counselor, but I know people go to credit repair places, and I think they do okay. In my experience, they do some things really quick, fast, and that seems to help. But in the longer run, then really it's just hard work, really, paying off debts or maybe working on collections that you may have to help do that. So, study that, do some online research. I prefer you do that last, right? Because, do stuff for free, and then maybe you want to pay someone to help you do that. Tips guide to buy a new home. What's the first step? Well, selfishly, I think the first step is to talk to someone, a housing counselor. There's several housing counseling agencies across town. We're there in Homestead. There's some in town. There's some in East Liberty. Talk to someone who's a HUD certified housing counselor. There's tests that we take in order to maintain our certificate, our training. So, I think that's always a great step. The great thing about working with me is I'm free. I'm going to pull your credit. We're going to look at your credit together. We're going to talk about what needs to be addressed, and it doesn't cost you any money. I'm paid for by HUD. So what happens is I meet with you, we gather some information, and then I tell HUD that we spent some time together, and they reimburse me for that time that we get to spend together. Fundamentals of owning a home. That's a good question. I don't know how to answer that one. There's a lot of fundamentals of owning a home. So one, you've got to get yourself in a position to be in the position to get a home loan, I guess, unless you have cash. And then secondly, you need to talk to friends, family, people that own homes about what their experience is. Sometimes I tell people, be careful who you talk to, because some people will tell you all the horror stories about being a homeowner, that this broke or that broke. And that's true. Those things can happen, but that's their experience. That doesn't have to be your experience. Don't let that scare you out of being a homeowner. Or if you don't want to get into that, then maybe homeownership is not a path that you want to go down. But fundamentals of homeowner to me is, you got to have your credit life kind of in order. Job stability is good. Having some money in the bank is fantastic. And that to me is kind of the first step. So how much can I expect a seller to come down? That's going to depend. I don't know how to answer that one. If you're asking them to help you with assistance with seller paid closing costs, I don't think you can expect them to come down as much. In the market that we saw the last couple of years, sellers weren't coming down, they were going up, right? We were seeing multiple offers over sales price. So I think we're kind of somewhere in between those two. I don't know that you can expect a seller to come down very much anymore. And it's situational. You have to look at the situation. I tell people, when you go to view a house, look at the clues in the house to give you an idea of what's going on. Is it grandma? Is it vacant? Look up the property, see who the last owner is, how long have they lived there. Those are all things that will help you kind of formulate, how you're going to make your offer. If it's been on the market a long time, if it's been on the market, not sold in the past couple of months, then maybe you could ask for a little bit more down and maybe a little closing cost help. How do I get down payment assistance? I think the simple answer on that one is you got to have the credit, right? You got to have that 660 to 680 credit. Anything higher than that should be open for any grants that are out there. So how do I get it? So having better credit is the first step in opening up that down payment assistance. The second step is having your ear to the ground as far as who's offering, what are they offering, and how can you leverage that the best for you in your situation. So learning and asking questions, talking to people, doing your research. But first and foremost, of course, is getting that credit score to a point where you will qualify. How do I get started with home ownership? Do I need to have money saved to get the process started? Yeah, we talked about that. You're going to need some money saved. What home ownership programs exist for single parents? Um, home ownership programs exist for married parents and single adults and elderly. They're out there for everyone. So we talked about PHFA KFIT, we talked about First Front Door. All those are great programs for people that are interested in home ownership. How to purchase an abandoned property? Wow, this is in a community. So I think that's fantastic, right? That's opportunity. It can be difficult, right? If the person still owns it, if they're not willing to sell, then you're not going to sell it. But there is a process through community land bank where sometimes they can get it back. The process is very slow. Sometimes the property is in poor condition and it only gets worse over the time that it takes. So I would talk to someone in your community, maybe in the borough or township, and kind of see if they know anything and see if there's a way to get that in. But I think that's kind of a higher skill level process, but I applaud you for thinking about that. I love to see properties come back onto the tax rolls, but kind of got to go to who owns it, right? We've got to find out who owns it. Does a bank own it? Is it abandoned, or is it someone that might be in senior living and not just in the property at the present time? So I received Section 8 and enrolled in the Family Self-Sufficiency, Section 8 Homeowners Program. How can I utilize these programs to achieve my home ownership goals, right? So so if you're in family self-sufficiency, there in many cases, they're saving money for you in order to help you get into a home ownership. Being in that program doesn't eliminate the need to have good credit. Being in that program doesn't eliminate the need to have employment. It doesn't eliminate the need to have your debt to income in line. So what can you do? Well, you can strengthen your credit. You can make sure that your hours at work and your employment stability is good, and that your debt load's in line. So do we help? Yeah, we certainly help. I work a lot with Westmoreland County with their family self-sufficiency program, and people come out of there after their 5 years with funds in order to purchase a home. What does your credit score need to be? 620 to get started, 660 to tap into even more funds that might be able to help you. 23 years old, looking for a foundation for my family. I have no real knowledge about home ownership. What are the steps to get prepared? So, at 23, I applaud you. I think that's a great time to think about it. You can't be too young to think about home ownership. And the number one reason people tell me they want to buy a home is to provide something to hand down to their family. So foundation of the family that you mentioned, that is the number one reason I get for people wanting to be homeowners, is they want to have something to pass down. Wealth, right? They're passing down wealth to future generations. So that's such a fantastic reason. What's the steps to get prepared? Make sure you have a job, credits building, talk to a housing counselor, and kind of get those base steps under, and then pick it up from there. What's a good place to look for determining when neighborhood or attended house is safe? It's good schools for what is a good ballpark for down payments? What's the likelihood of finding a 5-bedroom home in an affordable area? Where do I look to find them? Good places. So I think every community has information about crime. Every community has information about schools and how they're rated. So those are all readily available on the website. If you ask a realtor about whether it's a good neighborhood or whether it's a good school district, a realtor will not answer that question. They're not able to do it. They will tell you to look that information up on your own because they do not want to guide that decision. That's up to you for what you feel is good. Good ballpark for down payment, we talked about 10%, right? 10% is the big number, and we can work that number down. What's the likelihood of finding a 5-bedroom plus an affordable area? Well, that's a trickier one, right? There are 5-bedroom homes, but sometimes they're in areas that people aren't interested in going. I know McKeesport has a lot of larger homes. I know, you know, Glassport, some different areas that have larger homes. It's just a matter of identifying those and figuring out what's affordable, what can you afford for you, and where do I look to find them. Start on Zillow, go to open houses. Eventually, you're going to want to work with a realtor. I think a realtor is such an important part of someone that's on your team. I like people to interview realtors. I like you to have coffee, make sure that your mindset is the same as theirs. They know what you're looking for. I think to find a realtor, friends and family is a great thing. Maybe someone at church. Referrals are always a great way to find a good realtor. But I think you need to interview them just like you're interviewing someone for a job, right? Their job is to help you find a home. And when you communicate to your realtor that you're looking for 5-bedroom homes and what you call affordable, they would be able to do some search through the multi-list to let you know what's out there. Major factors in homeowning. It's expensive. It's not just the payments, right? It's not just making the mortgage payment. That's a big piece of it. But there is maintenance. There's grass. There's lawnmowers. There's gasoline. There's all the things that come with home ownership. Painting's so expensive. A can of paint can be up to $50. Um, uh, lumber, all that stuff is expensive. So what's the major factor? I think you have to be prepared, not only financially but mentally, to take that on. And to have some skills. Sometimes you don't have skills, right? So I'm not very handy around my house. I can paint, I can change some faucets, but that's about it. So part of my planning is I have to have a plan to pay someone if something other than that happens in my house. So that's part of my plan for when I think about sustaining home ownership, and being a homeowner. That's part of my plan. Minimum annual income. Um, I can't answer that one. I don't know what a 3-bedroom home would cost in an area that you want to buy. I can't answer, what you're willing to live in might be different than what I'm willing to live in. I do know that less affordable homes usually have deferred maintenance issues. So, it may appear to be cheap. It might be a $30,000 home, which maybe hits your sweet spot on what your payment is, but what's that going to cost to get you to stay there or get it to the level that you're looking for? I bought some cheap cars in my life, and cheap cars aren't cheap. You have to repair and maintain them. Same thing with a home. There are affordable homes. A good home inspector can give you an idea of what you're facing. And isn't that part of home ownership, is for you to make repairs, to make it your own? But you don't usually get to do those overnight. Usually that comes over time. So if you find a great $30,000 house that you love and you have some plans for projects, you don't have to do them all tomorrow. You can do them over time, over the next 10 years, 20 years, to make that home the home that is perfect for you and your family. What programs are available for Section 8? Well, if you receive Section 8, there's the Housing Choice Voucher Program. You should talk to whoever you get your voucher through, whether that's through McKees Rocks or McKeesport or the city of Pittsburgh, and talk to them about that program and how that works for you. There's a lot of rules that go with it. That do a pre-inspection. You have to be working minimum number of hours. I think it's 20 or 30 hours a week. And of course, your credit's got to be in line. Your income's got to support your debt. And you got to have the cash to do it. And the last question I have on here, and I'm trying to rush through, make sure we have some time for maybe pop-up questions, is what's the best time to buy? There is no best time. The best time is when you are ready, and when that house that you love is standing in front of you. That is the best time. I don't care what interest rates are doing. I don't care, if you're getting into the best time to buy is when the perfect house is staring you straight in the eye. This is when it's on the market. This is the best time to buy. Historically, we see springtime better. winter, not so much. If I told my wife we were going to list our house during Thanksgiving or Christmas, she'd kill me. It's too cold. We don't want to move during the dead of winter. So that's why springtime, aside from the tax refunds, we begin to see more houses come on the market in springtime because it's just much easier to sell a house in the spring. It's much easier to move. And so historically, the springtime, summertime, fall seem to be better. Winter, not so much. But to me, the best time for you to buy a house is when the perfect house is staring at you and you want to pull the trigger on that one to make that one your own. So to me, that's the best time. So okay. So my last, I want to end with another quote. Don't fear failure. This is simple. I try to tell people, so it's not, it does have challenges, but don't fear the failure of not being able to do something. Fear being in the exact same spot that you are next year that you are this year. So next year, looking back, maybe you didn't buy a house, but maybe your credit score is better. Maybe you have some money saved. Maybe you're closer to reaching your goal. So don't fear that you didn't get that house in that year period of time. Fear that you're going to be in the exact same spot, doing the exact same things as you're doing today. So keep that in mind. And, people amaze me every day on being able to, what they're able to do, what they're able to cut, what they're able to do in order to become a homeowner. And for many people, it is such a great investment for them to lock in that payment, usually keep your payment stable. As rents are going up higher and higher, I think that drives people closer and closer to being homeowners. So if you're interested, I'd love to help you. I'm there in Homestead. My number is 412-464-4000. My extension is 4008. As I mentioned earlier, I answer my phone when I'm in the office. I'm in the office a couple days a week, working from home the other couple days. But I'd be interested in talking to anyone that has questions or interested in taking that next step forward to learn more and get closer to maybe seeing if that's if that's a goal that you have. So again, the number is 412-464-4000, and my extension is 4008. You can email me. It's J for Jonathan Weaver. So it's jweaver@monvalleyinitiative.com. So it's the letter J, Weaver @monvalleyinitiative.com. We have a Facebook page. We have different things that will have our contact out there. But, I appreciate, Katie, do we have any questions that you got on your end?
I don't have any questions so far. Someone did ask you to repeat your contact number, which you did. I will also include Jonathan's contact information in that follow-up email, because please feel free to reach out. He will be happy to work with you on anything. We also work closely with the Pittsburgh Financial Empowerment Center. If you are looking for some basics of how to start saving money, or, Jonathan mentioned, don't pay someone to help you do credit repair. The Financial Empowerment Center does that often. They'll work alongside you, and all of their services are completely free. All you have to be is 18 and older and live in our area. They do free counseling. They can do one-on-one if it's just you. If you have a spouse or a partner, they'll meet with both of you. But they're happy to help you get started on some of those basic steps if that's also what you're looking for. And I will include their information in that follow-up email. But if people have questions, please feel free to ask.
I think the list you sent me, Katie, was pretty comprehensive. There was a lot of,
It really
lot of
was.
good questions there. I was so excited to see them.
Yeah. We do only have, I think, 10 other people on this call besides the two of us. So the 10 of you have a really high chance of winning our gift card for having attended. So if you came after I started our announcements, if your display name in the participant list is different than the first and last name that you registered under, please send me a chat or an email after the event and let me know what you were logged in as. Because you have a very high chance of winning that gift card. We had a much higher registration rate than who showed up today. So good for you.
Yep. Katie, we can't thank you enough. it's so important to me to get the information out there.
Yeah.
And what you do there is fantastic. We certainly appreciate you, um,
Yeah.
inviting me. Thank you.
Absolutely. Well, thank you. I don't know all this information, so it's great when I can reach out to our partners, and we're happy to provide financial services to people like this.
Sure.
There is one comment from Kelly. I'm assuming there's all kinds of programs out there. I think Jonathan touched on several of those assistance programs that you can look into when you get that email and the video, but there are lots of options.
And Kelly, remember, it's shifting, right? It's always changing. Something may be available, funds get used up and not funded again, and maybe it goes away. So yeah, it's always a shifting market. But if you build a great team of people around you, a good realtor, a good lender, housing counseling, insurance agent, home inspector, then many of those people have that information. I love when people go to open houses. You may not be even close to being ready to buy a home, but when you go to an open house, you meet a realtor, you can ask them questions. Maybe they know programs that I don't know about. You're going to talk the language. One of the biggest problems with real estate is that we have our own language and we assume that everybody speaks our language, and you don't. So going to open houses kind of indoctrinates you to absorb some of those things. Plus, if you're not ready, you can make all the mistakes you can, and it doesn't matter because it's not your time. But what it does do is it kind of sets the stage. You get training, you get more comfortable with the process, so that when you are ready, you got the right questions to ask. You know what you want to do. You know how you're looking at it. When you go to an open house, I want people doing a mini home inspection. Looking at the roof, looking at the grading of the ground around. So those practices, when it doesn't matter, I think makes you a better buyer when it does matter. So yeah, the programs are out there. They're always shifting, and people out there, realtors, lenders, housing counseling agencies can help maybe direct you to what might be there now and sometimes into the future. So
Right. And Kelly did say, is Google the best way to find them? That's a great place to start. I will add a comment of whatever website you land on, do a little digging. Does it look like it's a nonprofit or a government agency? Can you see if they're certified or trained on whatever information they're offering you? That might help you skip some of the potential scams that might be out there. So kind of like read it with a grain of salt if you're looking at things.
is it an ad for a company that they're just just trying to get more business? So and remember that your local banks, your PNCs, your Citizens, your West Bancos, Huntington, they're going to have more local programs than your Rocket Mortgages, your Golden Oak, your Citibank. Those are great national lenders, but they usually don't offer assistance to buyers. But we do see that with some of our local partners, First Commonwealth, First National. Some of those local lenders are the ones that provide assistance, and so learning about some of those, and can they, there's a lender that will pay closing costs. There's a lender that will do a match. If you put in 25, so those local lenders do that, where those national lenders usually don't provide that kind of assistance or support. Many times they'll tell you, call around, see if you can find your own grant. Well, that's not very helpful in some cases. So should you pretend to be interested even if you're not? If you like the phone calls, I guess you can pretend. But
Demetrius, that program is called the Pittsburgh Financial Empowerment Center. They go by FEC, and they'll meet with you in person or virtually. I'll give you the link how to get signed up when I send that email out. Oh, should you pretend to be interested in the open house? That's what Denise meant.
No, you can be as honest as possible. Hey, I just came in to see the home. I'm thinking about being a homeowner. I want to be a homeowner. No, you don't have to pretend that you're interested in the house. You can be totally honest, totally frank with them about where you are in the process. you eat their cookies, take their flyers. You don't have to pretend that you want to be a homeowner. Let them know. And a smart realtor would add you to their contact list, and a smart realtor would keep you in their database and touch base with you and make sure to see if you're progressing. A smart realtor, would help you grow towards that goal. And you get a chance to talk to a realtor, and you may connect with that realtor. You may want to work with that person, or you may not. I think that's just as important, to keep a list: people I connect with, people I don't connect with. um, I'm a big believer, you may not like me, and I'm okay with that. Find someone that you do like, that you can connect with, whether it's your realtor, your lender, your insurance. Connect with someone that you feel comfortable with, that you can be totally honest with, in order to help you reach that goal. But no, you don't have to pretend that you're interested. Just go in and be honest. Let them know that you're looking, and where you are in the process, and let's see how good of a person, salesperson, a real estate agent that they are. So great question.